Hello there, my name is Miles Pitcher. I'm the owner of Superior Lending. Welcome back to my channel. Today we're talking about seller carrybacks. And it's just so interesting to me how things that we used to do years ago have come back around. And the seller carryback is one of those. So I'm excited to show you this to you, explain it to you. Today we're going to cover what is a seller carryback, how does it differ from seller financing or an assumed loan, what loan programs can we use this on, and then a couple of examples or situations where this makes sense. So it'll hopefully get the creative juices flowing for you. But before we go into it, hey, give me a thumbs up on this video if you would. That helps a ton that my videos show up more often when people are scrolling or searching through YouTube. So first of all, how does it differ? What is it? So the seller carryback means that you're purchasing a home and the seller is going to carry a portion of the purchase price and finance that. Typically, you're going to come in and get a new first mortgage through some traditional financing, and then the seller is going to carry a second mortgage and you'll still bring in a piece or some down payment. It is in what we call a subordinate position or second position behind the first. On other types of seller financing, the seller may provide the full 30-year, not 30-year mortgage, but the first mortgage, and they may have a lien in place already that they're going to leave there, and they do what's called a wraparound. And we're not going to cover that today. We're specifically looking at the second position loans that the seller can provide to you and the benefits that come from that. This is also very different from assuming a loan. So if you're trying to assume an FHA or VA loan, this is different. I'll put some links to the videos on those topics down in the description. So this has to be an owner-occupied property. You have to bring in a minimum of 5% down to do this. But yes, you can do it with a conventional loan where the new loan is a conventional loan. FHA, no, you cannot. VA, yes, you can. But it's always interesting on VA in that if you can qualify for a VA loan, you probably are going to be better off just getting that 100% VA loan. USDA, no. And the jumbo loan is usually probably not, but jumbo loans operate on their own guidelines per lender. So there may be a jumbo lender out there willing to do it. But stay till the end and watch some of these examples on how we deal with a jumbo loan and this carryback seller financing. So terms on the carryback, what are you required to have term-wise? So they're kind of vague and not super detailed, but here's what we know. I know this is a lot, but so the interest rate on the carryback from the seller needs to be 2% below, or sorry, it can't be more than 2% below the market rate. If it is, then they treat it as seller concessions. And that means that's like seller paid closing costs, like the seller contributing money to cover your closing costs. So I asked the question, went to an underwriter and said, what are we using to determine what standard rates are on second mortgages? And their answer is to use prime rate. So as of today, prime rate's at 8.5%. That means that the lowest you could have the interest rate on the carryback would be 6.5%. You can go higher if you want, but 6.5 is the lowest you could go. So good info there. Let's go through some examples. So here we have, for my area, what would be a jumbo purchase, a $1 million home, and the client only has 5% down payment. Cool. How can we use a carryback to make this a win-win situation for the seller and the buyer? So the structure that we're going to do is we're going to come in with a brand new 70% new mortgage. It's going to be $700,000. We're going to ask the seller to do a second to carryback for 25% of the purchase price, or $250,000, and we'll come in with a 5% down payment. What's the benefits of this? Well, first of all, now we're in the conforming loan range, can do a conventional loan, and especially at a 70% of appraised value, we're going to get really, really good rates for our clients there. We're doing this with a very low down payment. Normally, you would not be able to do a 5% down jumbo loan purchase. Okay, there will be no PMI because the first mortgage is better than 80% loan to value. And for some of the sellers, they're going to be super stoked to be able to make some interest income because you will be making payments on that second mortgage or that carryback. So cool way that jumbo loans can benefit from this. Let's go into another example. There's a condo that some of our clients want to buy. It's a condo that is not eligible for FHA financing. Maybe because there's too many investors in the project. Maybe because there's some litigation between the HOA and the developer. There can be a variety of reasons, but they just won't pass FHA and be allowed. So we have to do these conventional. And our client, even though they have 5% down available, they have a low credit score at 620. And if you didn't know this, your private mortgage insurance on conventional loans is determined by how much down payment you put down and where your credit score is. Because these clients have a low credit score, they're going to get hammered on what their PMI is. In fact, I plugged this in and their PMI would be $416 a month. So how do we make this work? We say, all right, we're going to come in with an 80% conventional loan for the client. We're going to ask the seller to carry 15% as a carryback, and they can come in, our buyers can come in with 5% down. What's the benefits here? First of all, it's conventional now. So the financing on the condo is so much easier and so much better for the client. We're still getting in with a low down payment. There is no PMI. So that $416 PMI is not going to be there because our first mortgage is at 80%. And our seller's going to make some interest income on there. So you can see that this is a cool way of helping out on condos and low credit borrowers that have to go conventional loans. Okay. So I hope that helps you think about this a little bit more on how these carrybacks work. We're licensed in all 50 states. Happy to talk to you, give you some education, advice on this. Please feel free to reach out. Thanks for watching the video.